Hello ladies and gentlemen, welcome to my channel. My name is George Kingori. I'm your online finance guy who speaks about all things finance, how you can be able to save, how you can be able to invest, and how you can be able to grow in your finances. And today I'm going to speak about how to avoid taxes like the rich. So the key word is avoid taxes, not evade taxes. Evading taxes is illegal, but avoiding taxes is acceptable. It might not make everyone happy, but it is acceptable. So how do you avoid taxes? The first thing is you need to be a company. Yes, a company can be able to get away with claiming certain expenses that a private individual cannot be able to claim. For example, food. If you were to eat, if a company was to give food to its employees, it could be able to claim these expenses as a deductible expense as regards to tax purposes. But an individual may not be able to claim his lunch, his personal food, as a taxable deduction. The other thing is things to do with transport. Yes, a car in a company can be able to claim taxes deduction from fuel, repairs and maintenance and all these things. But you as an individual may not be able to claim this on your private car. So how do you go about it? The first thing is to ensure that everything that you have, that you own and that you use is actually owned by your company, so that you can be able to claim all these expenses and percentage of these expenses, even though you use them for personal reasons, as long as you can be able to justify that it is for a business expense. If you are able to eat, you can be able to say, I ate while working for the company. So such expenses can be able to be claimed, but through a company, and it is acceptable and it has been done before. That's why many rich people do not own the cars in their own personal names, but in the names of their companies. They also eat food at the office at the expense of the company, because then it can be able to be deducted from the taxes that the company is paying. So all these things make being a company or having things that are owned by a company much more profitable. However, the thing is you need to be able to claim or be able to prove that it was because of the operations of the business, not necessarily a personal expense. So you cannot be able to claim a massage session for you and your spouse as a business expense, because then this expense has to be the kind of expense that can be able to be used by many people in the organization and not in a discriminative way. So certain expenses you can be able to claim, but however you need to be able to justify why this expense has to be claimed for tax purposes. The other thing is register your company in a tax haven. In a country in which this jurisdiction, the rate of tax is low. Yes, tax havens do exist and they charge as low as 5% and maximum 10%. Many jurisdictions around the world charge corporation tax at the rate of 25%, going as high as 50%. So when you transfer the ownership of your company, or you set up a company that owns your company in your local area, but that is administered from a tax haven, then you'll be able to pay much lower taxes. So that is simply the way forward. So countries like the Panama and many other islands that are owned by the British, many of them have those tax advantages of being a tax haven. So find out which country you can be able to register your company and you can be able to enjoy a reduction in taxes. It may be immoral to many, however it is still legal. Then the other thing is receive your income in the form of shares, in the form of dividends, in the form of capital gains and such other things. Because remember, income tax is the most taxed form of income, income that a person can be able to derive. Yes, salaried people and people who receive a salary are the most taxed in regards to income tax compared to people who receive shares, people who receive dividends, and people who receive capital gains from their assets and things like that. So you could be able to structure income to be able to be coming from your company, not as a salary, but as an income in the form of dividends that could be paid every single month, or shares or other benefits that are actually taxed much lower. For example, in Kenya, dividends are charged a maximum of 15% for foreigners and other individuals who are high net worth. This is much lower than salary income tax that could be as high as 30%. So if you structure your income to be able to meet this fit these descriptions that are much lower in the tax bracket, then you could be able to enjoy these tax advantages. Then the other thing is retirement accounts and pension contributions. Yes, you can be able to reduce the tax that you are paying simply by being a member or contributing to a registered pension scheme in any country and having the deductions carried out direct from your salary, of course up to a certain maximum point. So determine this maximum point for your country and contribute this amount of money towards this pension so that you can be able to reduce the amount that is taxed for tax purposes. So find out these accounts. For Kenya is up to 20% of your income, up to a maximum of say 20,000 every single month, but these terms do change for every country. So find out how much can be able to claim towards reduced taxes. Then the other thing is, if you live in a country where inheritance is actually charged, you could do or go in the way of South Korea, where rich individuals who are high net worth actually do not declare death. Yes, they do not declare death, because by declaring death, any company and any assets and any incomes will be taxed on their dependents. Up to a certain percentage will go towards the taxman. So in some countries, individuals simply never die, or by the time they are going to die, they migrate to a foreign country where they are going to die and things like. Of course, this is immoral and highly debatable, but if inheritance tax is so punitive in your country, maybe you could consider not actually dying a natural death in your country, because then the taxes will be high. This has been a practice in certain countries like South Korea and others, where the inheritance tax is highly punitive. Then the other thing, of course, is you can be able to donate and gain social capital. You can be able to donate, because in some countries donations are actually tax deductible, say like in the Americas and in certain parts of Europe. You could donate to a cause that you care about and the social leverage in the process, and be able to see your money being used in causes that you actually care about. Because remember, when you pay taxes, you cannot say where your taxes will be used. They can be used in any way or form that might not be acceptable to you, but you could be able to take your money and do donations. And when you do these donations, you could be able to classify where your money is going to be used and in which place, and you could be able to claim that against your taxes. So if donations work in your country, maybe you could consider donating in your country. Then another thing is claiming as much as possible as regards to capital allowance. Capital expenditure are the things that you buy that you do not buy every single month, and you buy at once as you start a business. For example, for a company, it could be machinery. You only buy it once, because you do not buy it every day, because it is not a tradable commodity in your organization or company. So you could be able to claim the expenses that you incurred while buying this equipment and be able to reduce your tax liability. In fact, the individuals who actually buy equipment by and large quickly and most of the time, so that they can be able to claim these expenses every other year. Of course, you could be able to do research and development and also claim that against your capital expenditures that you are using to be able to keep your business competitive and pumping out the money that will be taxed in the future. But in the present, you could be able to claim those expenses now. So find out which expenses could you be able to claim, which research could you be able to do to be able to reduce your tax liability. Then the other thing is take a mortgage. I used to wonder why very high net worth individuals used to take a mortgage despite the fact they could actually just buy their houses in cash. Then I realized that it is because the mortgage interest is actually tax deductible, and because they are paying slowly by slowly, it is good for their cash flow, and it is also good because all these expenses that are incurred in getting this mortgage are actually tax deductible, and they go into reducing your tax liability, which may not be the case if you were to pay your house in cash. So if mortgage deductions and mortgage interest are the kind that you can be able to claim, especially for a first home, then you could be able to do that to be able to reduce your tax liability. So a mortgage is also a way to go. The other thing is a home ownership scheme. In some countries, there is a home ownership scheme, like in Kenya, where you could be able to do you'll be able to be deducted to go towards this home ownership scheme, and these amounts are deductible against your income taxes. So you could be able to find out in your country, are there home ownership savings plans that you could be able to use and utilize to be able to reduce your tax liability. It's also a way of reducing your tax liability. Then the other thing is, of course, a life insurance policies. In some countries, life insurance policies are claimed against the salary, the taxes on salaries that people receive. So if you want to safeguard your dependents as well as reclaim taxes, then you could be able to go this route. However, it is pegged on a certain percentage, so you cannot claim the total amount that you contribute towards life policies and life insurance, because it is pegged up to a certain percentage. However, if you desire to be able to do that, you could claim up to a certain percentage. In Kenya, it is around 15%. In your country, if it is claimable, you should be able to determine how much you can be able to claim to be able to reduce your tax liability. So life insurance is also another thing. Then the other thing is, of course, invest and reinvest. If you have a business and you desire to be able to reduce the amount of tax that you are paying, then you could continuously do reinvesting and investing, because remember, taxes, especially on dividends, come because you are distributing dividends to other people. However, if you were to reuse that money to be able to do a cash injection or investment injection internally, you could be able to avoid the tax that you could pay this time and pay it in the future. You could be able to invest in properties, you could be able to invest in buildings, you could be able to invest in research and development and all these things that could be able to reduce your tax liability now. And remember, you are also growing your business and you are claiming less taxes. So it is good for your cash flow, and it is also good to the overall well-being of your future and the growth of your company. Then the other thing, of course, is crypto investments. In many countries, cryptocurrencies and gains from cryptocurrency and investments have not yet come into the mainframe in terms of taxing these assets and these currencies. Many countries are still lagging behind, and they do not know how to classify crypto. They do not know whether to classify it as a store of value, as an asset, as a currency. And whilst this is the case, they have not yet started taxing crypto gains and crypto investments. So you could be able to take your money and invest in this cryptocurrency in the meanwhile, before they realize how to be able to tax them and how to be able to handle them, because as they wait, you could be able to make your gains that are not taxed, because the tax regime has not changed or adapted to be able to tax you for these crypto gains. So this is one way you could be able to take your money and divert it and avoid tax, because it is not yet a taxable asset or item. Then the other thing, of course, is this depreciation. You could be able to claim depreciation on your business, on your assets, on your cars, on your buildings. You should be able to determine how much you can be able to claim. And if you want to reduce tax quickly now, you could be able to claim a higher percentage quickly, so that you could be able to reduce your tax liability now. But remember that in some countries it is predetermined how much you can be able to claim for, say, for buildings or for cars or for machinery or for all these other things. So determine the amount, and if you can be able to claim it in advance or quickly, then you can be able to do so, because then you can be able to reduce your tax liability in the current form or state. Then, of course, the other thing is, like I said, retirement accounts. So you could be able to if you have your money in retirement accounts and you want to claim it, so you are about to retire, when you wait to be able to get your money up to a certain age, because remember, when you get your money much earlier than your official retirement age, then you could be taxed for the amount that you have been keeping towards your retirement in your retirement accounts. So if you claim it after that date, then there are tax advantages to be able to enjoy, and you might not be taxed for that amount when it comes as income, either as an annuity or as a lump sum up to a certain age. So if your country has such rules, it is good to be able to determine, because when you claim your money much quicker, you pay much more tax, because this is tax that you were not paying when you were being deducted, but they might deduct you when you claim your money much earlier than your retirement age. So waiting up to your retirement age will be able to help you reduce tax liability. I hope that I have been helpful to you. I hope that you are learning, you are growing, and you are gleaning. And remember, you can be able to avoid tax. Don't evade it, you might be arrested, but avoid it, and you could be able to reduce the amount of tax that you actually pay. Thank you, and enjoy your day.